Now from here, we're able to create a chart is what matters to us. Ultimately, we want to know the mortgage payment percentage versus income, and this is the chart that we get. And that's why it feels more difficult to pay or afford a home today. Hey guys, in this video, we're going over who really had it worse buying a home. If you're a young family wondering whether home ownership is actually harder today, we're going to be looking at historical home prices, median household income, and mortgage rates over time and compare them. That might surprise you or might not, but this would kind of show us housing affordability over time and might answer some questions that you might have of why you might be feeling things today and not maybe decades ago. So I personally pulled this data from the Fed, so we're using their data. Does it mean we trust them? We trust them as much as governments, big banks, and food industries who are trying to poison us. So no, we don't really trust them, but they do have a good amount of data. If there's better data elsewhere, let me know. But at least using the data that they have at least gives us a good picture of what we're looking at. So I took their data, created my own charts. This is straight from Google Sheets. I'm used to Excel at work all day, but this works, I guess. So this first chart looks at median home prices, and this goes back to even before the 1970s, and looking at median household income. You could see the data that they provided starts kind of in the early 1980s with that red line. So the home prices have a little bit more data, but we could still compare, and you could see how home prices have completely increased, far greater than household income. I think obviously that's well known. Now median household income or home price is well over $400,000. Now, however, this is only one part of the equation. So on one side is the home prices, but on the other side are mortgage rates. So this is looking at 30-year mortgage rates. You can see going back to early 70s, they increased in the 80s, peaked well over 15%, and then you could see we basically had a 40-year interest rate declining environment. So throughout the 80s, 90s, 2000s, it just went continuously down. The inflection point was in 2020. Mortgage rates hit an all-time low, and then they started to increase. So I would say after 2020 is when a new environment started happening, when interest rates started increasing. So with home prices being one aspect and mortgage rates being another aspect, both of those are used to create your mortgage rate, or your mortgage payment rather. So to keep things simple, normally your home price is low and your mortgage rate might be high, and over time, if the mortgage rate comes down and prices go up, normally your mortgage rate would remain the same. So that's what we're trying to compare. So we're going to start looking at mortgage payments compared to household income, because that's what really matters. How much of the mortgage payment percentage takes up your income, right? So this is a quick chart. There's actually a mortgage calculator within Excel or Google Sheets, what I'm using right here. So this is just incorporating principal payment and interest payment. This is excluding property taxes and insurance, which obviously those have gone up over time as well. But just to give you an idea, you could see how mortgage payments look comparing to monthly income. Here we're able to create a chart is what matters to us. Ultimately, we want to know the mortgage payment percentage versus income, and this is the chart that we get right here. This is going back to early 1980s. So you could see it was kind of in a range, maybe 12% up to 20%. And that makes sense. Home prices were increasing, but mortgage prices were decreasing, so the payment remained kind of in a range. You could see it peaked at that 20% during the Great Recession. Home prices were high, then they came back down, went back up. And what changed was after 2020, you could see a breakout out of this range of over 20% and now is over 30%. And this is why it's impacting you today. Through the 90s, through the 2000s, even after 2010, it was in this range. But now, because home prices are higher and mortgage rates are higher too, the mortgage payment percentage is higher compared to income. And that's why it feels more difficult to pay or afford a home today. So I did do a little bit more research into the 80s. The mortgage rates were so high, right? Going back to our chart in the 80s, it actually would increase similar to today's levels as well. So the mortgage payment to income today is similar to the early 80s. So this answers the question, is it harder to afford a home today versus through the 90s and the 2000s? The answer is yes, because the mortgage payment is higher compared to our income today. And it's also different from the 1980s because, mortgage rates were higher. However, if you bought a home in the early 1980s, as rates declined into the 90s and to the 2000s, you were able to refinance. So you not only got a lower rate, but if you held your home from back then, the home price was also lower. So we'll see what happens in the future. Mortgage rates don't seem to be coming down as expected. The past couple Fed rate cuts, they cut short-term rates, but long-term rates actually increased. So I feel everyone's in this mindset of, you could just refinance in a couple of years. Yeah, that worked in this interest rate environment because they declined for 40 years and now we're in a different environment. So our opportunity to refinance really isn't there. Home prices are at all-time highs. Actually, they might have came down from like last year or so, but still they're higher. Now mortgage rates are more elevated. Now again, this isn't even incorporating property taxes, which have increased with home prices. It's not including insurance costs, which obviously increase over time, probably much quicker than income. And this is also not looking at down payment. Obviously, in a perfect world, I think a lot of people would want to put down 20%. I remember looking into data and saw some articles how back then to save for a home, it would only take like 2-3 years versus today would take 7 to 8 years. So that's why back then people were able to get into a home maybe in their early 20s if they wanted to, mid-20s, and now people are starting their life age into 30s. So if we just do some math off the top of our heads, I remember my parents bought their home in early 90s. Average home price was around $150,000. So if just say we put down 20%, that's $30,000. And let's just say you're able to save $10,000 a year. That would just take 3 years. Compare that today. Median home prices are $400,000. 20% down is $80,000. Let's say you could save $10,000, which is becoming more difficult because inflation is growing higher than incomes. Right there is 8 years. And that's not even including closing costs. I've recently heard an argument of square footage is technically higher today than back then. But you could also argue how builders aren't building starter homes anymore. They're building either these communities or larger homes because there's no profit in building these small starter homes. So the answer to the question of who really had it worse buying a home, looking at this data, we can argue that people starting their lives today have it much more difficult than back then. That's why just working harder isn't always the answer. Yes, some people do have to work harder. You do have to save money. You are able to still save money. So this doesn't mean that it's just, the data's stacked against us, it's impossible to buy a home. I wouldn't use the word impossible, however, it is more challenging. I'll always go back to this chart that I found where it shows the average age to get married. And I use that gauge because it basically it's like the age where you start your life. and it has been pushed further and further and further out over time. People started their lives in the early 20s decades ago. It has been increasing till today is now around 30. And I believe that is highly correlated to life being more expensive and challenging today versus prior generations. So hopefully that makes sense, guys. And I just realized I had a baby monitor right next to me with white noise in the background, so hopefully that wasn't annoying in the background for you guys. But what we're trying to do is help young families navigate real life and inflation with practical money guidance in a broken system. And I think this helped explain why it's more challenging today for younger families. I mean, I have 2 kids and a mortgage, so I see how challenging it is, but we were able to do it. And hopefully this brings awareness for you guys to help understand what's going on. So if you have any questions, comments, concerns, leave them down below, and I'll see you guys in the next one.